Sorry about that. Okay, so let me know in the chat. Do you feel stressed? Are you concerned? Do you feel uncertain? Do you feel anxious or intimidated? Or this is your first step, so you're not feeling any type of way right now? Okay. Uncertain is good. Concerned a bit. What are we concerned about? Let's see. Well, we're gonna alleviate a lot of that today. So today, the agenda is learning about buying your first home. First thing we need to do is to find a lender. Please, 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 if you're gonna look for a home, don't just go into a house and say, oh, I want to put an offer in for this home without finding a lender first. The whole purpose of a lender is to get pre-approved for a loan. So you won't have anything uncertain about. So you know what your buying power is. Your buying power is how much money you qualify for you to get a loan in order for you to purchase the house that you want. So you can walk into a $500,000 house and say, oh, I want to put an offer in here on this. But when you go to a lender, they tell you you only qualify for 400,000. So you would like to know that before you walk in to a home that you're looking at. And then the home that you look for, you wanted to make sure it's in your budget. So again, that's what the lender is for. So you can stay in that budget for you to purchase your first home and feel comfortable. Okay, and then after you find your first home, you find the lender and you go through all of everything that we're about to go through today. You go in the contract and then the fun begins. That's the fun part. Just a little bit about me, not too much, brief synopsis. I'm a professional dream home matchmaker. I am here to make sure you get the home that you are looking for. I've been in the business for about 20 years and I'm officially and originally from Brooklyn, New York. I've always had this passion to help everyone achieve generational wealth. So your first home, don't look at it as just something that you're going into. It might not be your forever home. It could just be your first stepping stone into your bigger home. Okay. Enough about me. So what are the first steps to home ownership? First things, come to this class and learn everything. I have all the answers, and if I don't have the answers, I'll surely get the answers. Next step is to get pre-approved with your mortgage broker. House hunting with a realtor. That would be me or a realtor of your choice. And then you move into your dream house. Those are the steps, but there's some things to, fill in between all of that. So mistake number one, being a first-time home buyer in the state of Maryland, they have first-time home buyer incentive programs to help you out with closing costs and things like that. So mistake number one would be ignoring the fact that they do have these programs out there. So what the first-time home buyers grant they have in Harford, Baltimore City, and the county, it depends on your income. And some of them are forgivable second mortgages, and they help with your down payment assistance. Here's an example for a conventional loan. So you purchase a new home for 400,000. Minimum down payment is 3%, 12,000 of the 400. And then you have these incentives for the FHLB workforce housing. That's 15,000 that they will give to you as a grant. Of course, you have to qualify your income. They have an MMP grant up to 5% of the loan, which is about 19,400. Total closing costs would be 22,400, excuse me. And FHA loans are only loans that have the upfront mortgage insurance premium. So if you have an FHA loan, you will get a mortgage insurance premium that kind of helps you down the line if you struggling to pay your mortgage. They have programs to assist you with paying your mortgage down, like loan modifications or whatever the case may be. You could talk to the lender about that. So these are the different types of mortgages. There's a conventional loan, the FHA. USDA is for like the rural areas, like farm country type thing. And then for VAs for our veterans. So if you're a veteran, you can get a loan that's about 100% financing, and they help you get into your first home. So FHA is also the Federal Housing Administration. They give out loans and provide mortgage insurance on loans made by FHA approved lenders throughout the USA. So you can go to California and still get an FHA loan. So benefits of FHA loans: low 3.5% down payment with a score of 580, but know that your interest rate may be just a little bit higher. The lower your score is, the lower the interest, the higher the interest rate is. And the higher your score is, the lower your interest rate would be. Credit score as low as 500 with 10% down with FHA loans. Easy refinancing with FHA streamlines. They can just streamline. If you have a lower interest rate out there and you want to lower your interest rate, you can do that after you purchase. This is after you purchase. Low mortgage rates. Higher DTI ratios accepted. So that's DTI is the debt to income ratio. And that's something that you'll talk to with your lender. You can choose between 15-year or 30-year fixed rate or adjustable rate term. So the fixed rate is just your mortgage is going to be $15,000 every month for 30 years, unless your insurance or your taxes go up. That changes if they go up or down. An adjustable rate term, it could be a 2-year adjustable rate or 1-year adjustable rate. I don't usually recommend that, but that's a preference that you could talk about that with your lender. Say 2 years, you'll pay interest of maybe $1,500 a month. And then after the 2 years is up, it'll skyrocket to your principal, interest, taxes, and insurance, and it'll probably be maybe almost $3,000, depending on the home. So you have to be ready for that. You might want to refinance after that 2-year rate term is up. Down payment assistance programs or grants are accepted with FHA loans. And the seller can pay closing costs. They can help you up to 6%. So conventional loan is a home buyer's loan that is offered through a private lender or one of the 2 government-sponsored enterprises, which is Fannie Mae or Freddie Mac. That's, again, the lender will explain the Fannie Mae, Freddie Mac. They are just the companies that finance your loans through FHA. Is everybody still with me? Okay. So what you can and cannot use for down payment or closing costs. If you have a retirement account, 401k, you can use funds from there to purchase your home. You can get gift funds from relatives and friends that have to be approved through the lender. If you have stocks, bonds, cash, if you have cash, it has to be seasoned in your bank account for a certain amount of time. So if you have cash underneath your mattress that you're holding, I suggest you throw that in the bank real quick and have it seasoned. And seasoning is just having it in the bank for at least 2 cycles, 2 statement months, 2 to 3 statement months. And again, the lender will let you know. If you have cash underneath your mattress, you might want to add that because that will go towards your debt to income ratio and how much you can afford to purchase in a house. What you can't use are credit cards. We don't want you more debt than you buying a whole house and then you have credit cards that you use to buy with your house. We don't want that. Another loan or undocumented cash. That's the cash that's underneath your mattress. Let's not do that. So buyer's eligibility based on underwriting review. So the underwriters, they're going to see your ability to repay the loan and your willingness to repay the loan. And if you have any collateral, like if you have a land somewhere or a house somewhere, you can buy another house from another state. If you have another house in Maryland, then you wouldn't be a first-time home buyer. All documents are to be validated through the underwriting process. So that's, you want to be nice to your underwriter because they're the ones that say, okay, approved, and you get your commitment letter at the end of this term. Okay, does anybody have any questions? I know I said a whole lot. No questions? Don't give me a thumbs up if we're still good. Okay. Talia says not yet. All right. So mistake number 2, not getting a pre-approval. That is your biggest mistake, not getting a pre-approval. You don't want to start looking for houses and you don't even know what type of house you're trying to buy. So I had a buyer that has a agent that is showing him houses and he doesn't even have a pre-approval. It's like, that's not true. You don't need a pre-approval to look at houses. Well, you don't actually need a pre-approval to look at houses, but if you're trying to purchase a house, that pre-approval is pretty much needed because it kind of tells you whether you're serious or not about purchasing. So 3 pillars of a mortgage approval is your credit, income, and your down payment. So loan pre-qualifications. A pre-qualification helps you determine how much you can afford to spend on a home. So your 3 factors, as I said, is your credit, your income, and any assets that you have, like your 401k, stocks and bonds, and so forth. This will determine what house you qualify for, as I stated, and increases your bargaining power when negotiating with the seller. So the seller is not going to want to, entertain an offer from you and you don't even have a pre-approval letter attached to that offer. Things like, okay, how's she gonna buy my house? Not unless you have cash. So if you don't want to go through a lender and you have, let's say, $400,000 just sitting in the bank and you don't need a lender, you can just say, I'm gonna buy your house cash, and then that's it. You don't, only thing you do need is proof that you do have that $400,000. So either way, we still need something stating that you can afford this property. So estimating your monthly payment and your total investment. Again, that's what you do with the lender, and then that identify which loan product will fulfill your needs. Again, with the lender, lender will walk you through all of that. So tips for a simple loan approval. These are the do's. You call us if you have any questions. Please call if you have any questions. I will, if I don't have the answer to any question, I will find the answer to your question and we can get everything solved. Continue living at your current residence. Just don't start house hopping when you're trying to buy a home. They want to make sure that you're stable, because if you can't pay your mortgage and you are liable to skip town all the time, then they're not going to approve you. Continue paying your mortgage or your rent, because they do look at that. So your rent, they will ask for rental history to make sure if you're paying your rent on time. Continue your credit card as normal. Don't go buy no Lamborghinis out there. We don't need that in front of your house because you're about to buy a new house and you need a house, you need a car to match your house. Wait till after closing. So keep working at your current employer. Again, they want to see the stability. Keep your same insurance company. So that would be if you have rental insurance. You can change the insurance company if you want, but if you have rental insurance, it's easier transition to homeowners insurance from a rental insurance. So stay current on all existing accounts and expect requests for additional documentations throughout the process from your loan officer, from the processor that's working with the loan officer, the title company that's pulling documents for the house that you are purchasing. They'll ask for documents as well, and underwriting. You're gonna be faxing and sending over some documents until we get this process taken care of. The don'ts, don't make any large purchases like that Lamborghini I just talked about. Change bank accounts or make any large cash payments. Transfer balances, close any credit card accounts, because that's all these are red flags. Consolidate your debt onto one or two credit cards. Don't want to do that. Apply for new credit or take out a new loan or co-sign on a loan. You are not to do anything with your credit when you are trying to purchase a house. Like, I cannot express that. Had a buyer 2 days before settlement, bought a Mercedes, went to settlement the next day. The lender pulled his credit again to make sure everything was still okay. And he was not qualified for the loan for the house that he was about to purchase later on that afternoon because he just bought a car to match his house. We're not going to do that. And we don't max out or overcharge any of the credit card accounts because that means you're not being responsible with your money. So they use that as a determining factor as well. So mistake number 3 is using your bank. So they say not to use your bank, like if you have a PNC or a Bank of America, Chase, Citibank, whatever it is, using your bank is not recommended. You would like to use a mortgage broker that can get you the best loans out there. Like he'll run your credit one time and then he'll pretty much shop your credit to different companies or different mortgage companies that have the better rates for you in your circumstance. So if you go to a lender, they'll have right here, they'll charge origination discount points might be high. That you're just one client to them, just a number. And large banks typically have stricter guidelines and will not cater to specific situations outside their general box. They're going to check one box, and if you don't check that box, then they don't qualify you, and then you just had your credit ran nothing. And then large banks, they may not offer down payment assistance programs, so I wouldn't go to them. They can't even help me, pay my down payment. Okay, and in the chat, you can see that I have my booking webinar site if you want to book a call with me so we can have a direct one-on-one and I can talk to one of my lenders. You can click on that to book a session with me. Okay. Now, buying directly from a builder. So buying directly from a builder, you can buy a house, but you want to get an agent to help guide you through because builders have salespeople that sit in there and they wait for people to come in to purchase the new homes because it's enticing, it's lovely, it's beautiful, and they're going to sign a contract with you. But do know that the builder was sent. The builder is represents the salesperson represents the builder and will not represent you. So you need an agent that is looking out for you. So closing costs can be a bait for higher interest rates. So they do have like incentives like 50% or 15% off your closing. They'll throw in an addition. They'll do a lot of things to try to get you to sign a contract, but they don't have your best interest at heart. So realtors can help you make the best decisions financially as you build. The salesperson, again, looking out for the builder and not for you. So we work for you and the sales agent works for the builder. So realtor is knowledgeable about what to look for during inspections and final walkthroughs. So the builder is just going to walk you through the house and not literally tell you anything about what happened, what's going on with the house, and so forth. So you need somebody to be in your corner. And with that being said, always get a home inspection. That's mistake number 5. Never skip a home inspection. If you have a house that you like, and you place the offer and everybody accepts this offer. It's called a ratification. And ratification basically means everybody just had a meeting of the minds and we agree on everything that is going on with this contract. So skipping a home inspection, I hope you're a home inspector or a builder or a contractor, but you would want to know what's going on with this house before you purchase it. So if there's something in the home inspection, you can pretty much say, okay, I don't want to deal with that, so I'm going to back out of this contract and we're going to look for another house. If you don't have a home inspection, you don't have the opportunity to do that. So what is the cost of skipping a home inspection? You purchase the house unaware of deal breakers. So the deal breakers would be the roof hasn't been redone in the last 56 years. That's a deal breaker because now you bought a house and now you got to buy a whole new roof. So you want something, they can put something on top of the roof to make it look like it was done, but it's sometimes it's like all a facade. You lose your negotiating power. So you can't negotiate getting things like the roof fixed in order for you to purchase this house. You risk inheriting non-structural safety issues such as mold, radon, carbon monoxide. So all that needs to get tested when you go and you look at a house and you get a home inspection. You missed having a forecast of future repair costs. So you don't get a home inspection and your HVAC system is on its last leg. As soon as you buy the house, you move in the next day, that whole HVAC system goes out. And now you have another cost. And then you're going to be like, oh my gosh, I should have got an inspection. So you're oblivious to illegal or no code additions and remodels. So when people they do remodels and they don't get permits for their home to redo the kitchen or redo structural or put an addition, they put an addition on the back of the house that was not permitted. That means the inspectors didn't come out and say, okay, this is done correctly, you can close up shop and everything is above par. If they don't have any inspections or any permits, then that's an open, because you don't know if they did it properly or not. So in order for you to know that everything was done properly, it has to be inspected by the city or the county, and the permits need to be in place for that. So without a home inspection, you won't know. So mistake number 6, skipping the condo document review. So this is only relevant if you buy a condo. So condo or even an HOA. So this goes from condo, HOA. HOA is a homeowners association. So what's the risk of skipping this? Legal risk is skipping the review can lead to unknown legal issues like undisclosed fees and disputes. One thing I know that lenders, they have like a list of what condos or homeowners associations they will work with because they have legal fees or financial liabilities or anything that's in there that might be construed as being a risk of giving you a loan for you to purchase in this community. So if you're looking for a condo, it's more likely a condo, less likely a homeowners association. Looking for a condo, we need to find out the lender that we're using so we know if they will finance this property at this condo association. So financial liabilities, buyers may miss hidden costs such as special assessments or pending litigation. Maintenance responsibilities, you need to know if they are shared water, electricity, electric you pay, water, sometimes the association pays, sometimes you pay. Important details shared about expenses and maintenance may be overlooked. So the resale impact, mixing restrictions can affect the condo's resale value and investment potential. So we're not going to skip the condo document review because that is important. It might seem meaningless, but it is very important. Okay, so recap of this class. Don't ignore first-time homebuyers incentive programs. First thing we're gonna look for when we talk to the lender, we want to see if there's any programs that you qualify for, like nurses, first responders, like police officers, fire, nurses, doctors. I think doctors have their own program, and teachers. So make sure we find out the first time home buyers incentive programs. Getting a pre-approval before home showings is very important. Don't just go to the bank for a mortgage. Use a broker with access to multiple lenders, including the banks that you have. You can shop because they will know who has the best deal for you. Do not skip in home inspection. Do not buy directly from a builder. Have an agent represent you to ensure that they have your best interests. And do not skip on the condo document review. So has this free webinar been spent well? Are we learning something today? Did we learn anything? Let me know in the chat. So how comfortable do you feel now able to purchase a home? I'm gonna turn because I want to speak to people in a couple of minutes. Learned a lot, less pressure. Okay, that's good. Okay. Is it fair that using these tips will give you like a significant advantage when buying a home? Okay. I don't know what you knew about the home buying process coming into webinar today, but did I cover stuff today that was valuable to you? Was new and valuable? If you want to spend more time with me, again, there's a link in the chat. I'm going to paste it again. You can book a session with me and then we can have a chat. Okay, the next steps, I'm offering consultations. Time is not too limited, but I want to help everyone here accomplish your home ownership goals. Again, just click the chat, check the link in the chat, and then schedule your call with me. I think I sound kind of scratchy. I feel like I sound like a what do you call that? A sketchy cat. So next steps is book a call with me, discuss your personal situation, get pre-approved. I can talk to my lender. If you have somebody that you know or if you want to deal with, you can talk to them and we can go house shopping for your dream home. Okay, I'm glad I confirmed. Does anybody have any questions for me? I want to hear people. Can anybody unmute? You're welcome, Alicia. I know everybody has dinner. They just came home from work. I appreciate you guys coming. Oh, you have kids in the background. That's fine. I don't know if you heard my dogs barking in the background. I'm like, oh my God, they better not bark anymore. Okay, well, thank you so much for attending my webinar. Again, if you want to book a call with me, we can move on to the next steps of getting your first home. I'll be more than happy to talk to you. Can have my lender on the phone with you and we can get the moving. You have a great evening too. You're welcome. Hey. Alicia, I got your number. Go ahead and book a call with me and we can chat, okay? Just click the link in the chat. You're welcome. If anybody has a question for my lender, I think he's here. Let me see if does anybody have a question for my lender? Okay, well, everybody have a good night. Thanks so much for stopping by, and I look forward to talking with some of y'all. Have a good night.